Today I'm going to show you a Forex RSI indicator strategy that actually can be used for stocks and futures, E-minis as well, not just Forex, but we're going to use Forex examples today. And it is one of the best RSI trading strategies that I've seen. You can use it for day trading, and it's a little bit advanced. I would say maybe intermediate. And we're not going to be using divergences so much like a lot of people teach, and I'll show you why in a minute. So the RSI is a momentum indicator, just like the stochastic indicator, MACD indicator. These are all momentum indicators. That's the first thing to understand. So when we talk about it, we're talking about strength, momentum. Think of a train going down the track, has a lot of momentum. So when you think of that energy of momentum, understand that we're looking for sustained energy. It's very hard for a train to go down the track and just stop on a dime, right? Even if you apply the brake, it's going to keep going. So that's the type of thing that we really should be looking for here with the RSI indicator. So the strategy is this. So let me bring up first my indicator. So I'll show you how I have it set. I always get this question, as well I should. So it's very simple. The way I have it set is 14 periods. That's pretty common. This particular indicator has a moving average connected to it. I took that off. Well, I just made it 1 so it doesn't show up. And then I set the RSI to red. That doesn't really matter. But anyway, okay. Oh, and then the other two things. Upper and lower horizontal lines are 30 and 70. Again, pretty standard, but I've seen people use different parameters there. So those are the ones that we're using for today's purpose. Alrighty. So now here is the concept. The concept is this, that as long as the indicator, the red line here, is between 30 and 70, we're not seeing any super strong momentum in either direction. All right. So there's some, but we want a lot for this particular strategy. So we're going to look for the very first time, notice this whole time here, that the indicators stay between 30 and 70. So the first time is the key. The first time that it hits, in this case, 70, that's showing a lot of strength to the upside. So now that train is going very, very fast north, and we got a lot of momentum. Now, look what happens. Again, you don't want to trade an indicator by itself. An indicator is, well, what does an indicator do? It does what it promises. It indicates, okay? So it doesn't tell, it's not a fortune teller, it's not a crystal ball, but it is a mathematical formula, and that math is meaningful. And in this case, we've already discussed what that is, momentum. So then we look for other things. So we say, okay, well, what's going on when we hit that strength level? That's bullish strength. See, a lot of people interpret this as overbought. And that is not normally the best way to read this. The first time it comes into here, an operative word, first, then we are finding a very initial movement of strength. Now, we got a resistance level over here, and we break above it. So that's very key. Then we come back, and I've got a 20-period moving average here. That's what this black line is, 20-period 20-period EMA. So the key is we hit that strength here. So the indication is that there's strength to the upside. Then what we want to do is say, okay, how are we doing with price levels? Oh, we broke above it, confirms the strength. We retrace back to it, and we retrace back to the 20 EMA in this case. You can use your favorite moving average if you want to. And so we have a cluster of support. And therefore, we've had our first strong impulse move up. And therefore, that's where I would get in, looking for the train to continue to go up, that momentum to continue. All right, so early, why do we say the first time to the misnamed overbought line? I say that because we want to get in as early as possible into a new indication. Professional traders are always getting in early. Amateur traders are always getting in late. So you take the first signal. Now, sometimes these signals will continue for a long, long time. Other times, not so much. So that's where your money management and risk management comes in. In this case, yep, pretty dang good. Look at that thing just go to the moon. So pretty awesome. All right. Now, let's look for our next signal. There's our next one. Okay, boom, again. So this is the first time after a long time of the RSI being between 30 and 70 here. And this is the first time, boom, it hits 70 again. So momentum up for the first time for a long time. Strength up, again, not overbought, oversold. See, some people will teach that's overbought and you should go short. That's not how I would trade this. So as we go forward, then again, what do we got? We got ourselves the first time it hits there, boom, we get above the previous high. So for price structure, retrace back to the moving average, and away we go. So you could really break this down into 3 steps, right? Step 1, look for the first time it hits the upper line there. I don't want to call it the overbought line, but the upper line at 70. That's step 1. Step 2, do we break the previous price high? Step 3, wait for a retrace back into our moving average. And also we can extend this price high over here. We want that kind of cluster. I would say this, again, you can use different moving averages, you can use your favorite, but I like to see it, the key to me is I like to see it hold this, I'll bring this across here like this, and hold that previous high. So it's a break and retrace to it. So that resistance becomes support, as is commonly talked about. All right, so that's really the technique, step 1, 2, and 3, 3-step technique that you can use for this. Now, you can use this to the other side as well, but, and I want to just show you this because this is very important. All that is nice and neat and tidy, but TopDogTrading here, we insist on showing you all kinds of times when things don't go as perfectly. So here we get the first time that it goes down and hits the lower line at 30. All right, does it work out? It does, but it's not so neat and tidy because we've already broken out through this resistance level or support level way back there, right? Okay, and do we return back to the moving average? Not quite, don't quite make it. So we don't get, that perfect 1, 2, 3 setup that we were talking about, but it still works. And this is what I want to point out. So we get our retrace. This is what I would look for. Boom, 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 boom. We get our retrace. Now, at this time, you might want to say, okay, we've stayed below the moving average, and we've got a nice pin bar here for our candlestick. And you could use that for your entry to go short. All right. So, and then if you want to, you can even go back here and say, well, wait a minute, is there a support level that we have broken? And the answer is yes. Let's see here. There we go. So in this case, we hit our momentum indication here, which is bearish. We broke through a support level that we have to go all the way back here now to find, and we retrace to it. So sometimes you just have to be a little more, look back at a little more historical data because we had such a strong down move here before we got the indicator signal. Okay, but the principle still applies. It's still there. It's still there. It's just in this case we had to go back there. So you might have to, when you get a big impulse move like this, then you might have to look back a little further to find the support level or the resistance level that you're broken. Now, I encourage you to have also, some other things here that you're looking for, but that's the step 1, 2, and 3. You might want to combine it with other things you're already using, and then again, don't trade just one indicator. Look for price structure. Make sure you got your risk management and your money management honed in. That's very, very critical. So if you like the video, if you found it helpful, feel free to let me know down in the comments. If you have any questions, type them there. Also, I have a complete trade strategy that I'd like to give you absolutely free. It's my rubber band trade. And I love the rubber band trade because it has such a high win-loss ratio. And I'm willing to give it to you for free. Absolutely free. Take it. Hope you can make some money with it. If you trade it like I do, then you're going to do very, very well with it. I love this trade. I still take it to this day. And it's simple. I can teach it to you in about 26 short minutes. So you can get that absolutely free by clicking on the little green box there in the top right-hand corner. And we'll get that over to you with the video tutorial. And my compliments, my gift to you.